What's up, traders? In today's video, I'm going to be performing a market forecast on gold using smart money concepts. So stay tuned. Okay, so if you haven't already, please make sure you head over to the channel and watch last week's video where we break down and perform a market forecast on NASDAQ using smart money concepts. As you can see at the time of recording this video, we are sitting on 98 views. It would be awesome if we can get this one up to 150 views. I would absolutely love that. And also, just for reference, I am recording this video on the 26th of April. The time has just gone 13 minutes to 3 local time. All right, so let's jump straight into the analysis. At the end of this video, I will have another quick look at NASDAQ just to see how price has moved since our last analysis last week. All right, gold, as always, we're going to start off on the weekly chart just to give us a little bit of an indication of what price action is doing, what we can expect from a higher time frame point of view. And I think it's clear and we can all agree that this market has been bullish for the longest time. No surprises in there. What I do find interesting though is that, oh, and by the way, this bullishness has been reinforced by a break of structure to the upside here, a valid break of structure to the upside. But what I find very interesting about the market on the weekly is the formation of this double top formation right after the break of structure. Now listen, it took a lot for price to violate this high, all right? And we ended up putting in all-time highs on gold back in August 2020. Now, last month, we've seen that price action has come in to retest those all-time highs, but unfortunately, it could not push past, all right? So, obviously, as you guys know, a double top is a retail pattern that oftentimes suggests some bearishness is going to be entering the market in the near future. Now, obviously, from a smart money point of view, double tops are what we like to call liquidity. Double tops, double bottoms, trend lines, and also your swing highs and your swing lows are all examples of liquidity that can be used in a smart money context, all right, when we're trading. And as you can see, there's obviously no surprise that price action has been putting in higher highs and higher lows, violating this previous structure high, and then we pulled back into previous structure in here before forming that double top. Now, where's price action going to go from here? Well, that's why I would like to draw your attention to these two swing points in here. I've got one swing low in here, which I'd like to identify as a potential sell target, and another potential sell target that I want to identify is this sell target in here. Now, the reason I want to identify these 2 points is because they are swing low points of the external structure that I just outlined on a weekly chart, and they are significant because if we are to see price action push bearish, and if this is to become a bearish market, larger time frame obviously here on the weekly, then you would want to see this particular low taken, and then an extra confirmation of that bearish structure would then be a violation of this swing low. All right, so our work on the weekly chart is done, or on the weekly time frame is done. What I'd like to do now is I'd like to drop down to the daily, and I'd like to really zone in on what exactly can we expect from this market. And from a smart money point of view, what I like about these two particular swing points is that, number one, the swing point above, okay, is not only acting as a strong level of support, but it is also acting as a strong or a very significant area of liquidity, right? So we have a bunch of equal lows right in here. Now I'm just going to mark them on briefly here. So we have a bunch of equal lows congregated in this zone around 1676, and that's a good thing, because if we look towards the lower swing point, and if we zoom in here on the daily chart, what we can see is that we have a valid daily order block that has formed in here. What we can see is this particular swing point, it's a valid order block because it led to a break of structure. It led to a valid break of external structure. Remember, we marked that out on our weekly chart, and we saw that we've been putting in these higher highs, we're putting in these higher lows, and then what price action ended up doing is it ended up taking out this high. Now I won't regard this pullback and this low as an external structure swing low, purely because this is what I like to call engineered liquidity, right, in a short money context. And I'd like to mark that as a swing low. So that's some engineered liquidity, because what you'll often see when you're identifying these valid breaks of structure, okay, when you're looking for these breaks of structure and when you're identifying your order blocks, is you'll oftentimes see price action after putting in a new high or a new low. Price action will pull back, reinforce the underlying trend. So in this case, we put in a higher low, and then before breaking that previous higher high, it will come in and give us a little bit of a complex pullback before violating. All right, now this is significant because if you think about it, and if you think about these types of structure points from a retail point of view, what a lot of people are going to be looking at is they're going to be looking at these swing points as potential areas of structure. Okay, they're going to be marking these zones out. They're going to be looking left. They're going to be seeing that price action in the past had interacted at these levels or at this particular swing point. And what they're going to be doing is in the future, they're going to be anticipating price action to, after it pushes away from the zone, they will be anticipating price action to pull back into here and then continue with the trend. All right, so even though at the moment we might not have any orders in there, as soon as price action starts approaching the zone, a lot of people will be identifying this area as significant structure support from a daily time frame, and they're going to be looking for potential buy areas in here, or your breakout artists are going to be looking for potential selling opportunities from here. So this would be a nice area of the chart where we'll see a lot of orders accumulating. Right, so not only is this a valid order block because we see a break of structure to the upside in here, but this is also a valid order block because we have liquidity that sits just above it, and we also have some imbalance in here that sits just above that order block. All right, so if price action is to, from where we are now, come to this particular level at 1676, violate this area, then we could see price action tap into this zone, into this daily demand zone, and then we could see a mitigation and a potential continuation of the underlying bullish trend. Okay, so very nice daily demand zone here on our second swing point. Absolutely love that. And if we look at now more recently, we've had price action pushing up, creating higher highs, right, creating higher lows. And then what we've now started to see is we started to see a little bit of consolidation in here. Okay, now what stands out to me in this particular part of the chart is that we have another valid break of structure in here to the upside. Okay, so that's point number one checked off. We have a valid break of structure to the upside. After that, we ask ourselves the question, well, is there any valid order blocks that have formed during that bullish move that broke structure? Well, straight off the bat, I identify this particular level in here, or this particular zone in here, as a really nice daily demand zone. Why do I say that? Because we have an area of the chart where we had a little bit of a pullback, right, on a lower time frame before a strong bullish continuation that led to the break of structure. Now you can also identify this particular bearish pin bar as a order block or as a daily demand area because it is the last bearish candle before the bullish move that led to the break of structure. But the reason I will not really be focusing on this particular zone is because of two things. First of all, we do not have any imbalance present above that zone, okay? And then second of all, we do not have any liquidity that is present above the zone. And with this particular daily demand zone, what we do see is we see a really strong bullish reaction after the formation of that demand zone. We see a little bit of imbalance present, which will be a lot clearer on the 4 hour. And then we see this particular swing low point, which, as we saw here, if I just take you back, which, as we saw here, is a little bit of what I like to call engineered liquidity sitting just above that zone. So what we can now see is, and this is significant, all right, we've identified a sell target here, we've identified a sell target here, and we already know that if price action is to come into this area of the chart, this is a high value area to look for potential buys from to continue that underlying weekly trend. Okay, now if we come in a little bit closer above this particular swing point, we've now identified a valid break of structure, again in line with the underlying trend, and we've identified a really nice daily demand zone. So what we can then see is, from a intra-week perspective, is we could then start looking for price action to potentially push down towards this area, mitigate this zone, pull back to fill some imbalances that have been left behind already by this particular move to the downside, before rolling over to tap this level and then to tap this demand zone. All right, so we've already started building a picture, we've already started identifying some high value areas. Okay, before we drop down to the 4-hour chart, the last thing I want to show you is, not only is this particular swing point in here a swing low liquidity or engineered liquidity, we also have above this zone, we've also got some equal lows, some really nice equal lows actually in here that stretch the length of about a month. So we have some really nice equal lows in here. So again, it just reinforces the fact that this then becomes a really nice daily demand area to potentially look for buys from. Right now, before I drop down to the 4-hour, one more thing that I want to point out is this particular supply area in here. Now this is where smart money becomes very, very interesting. So overall, we're bullish on a larger time frame. We have already identified two particular zones, two particular high value areas that we would like to see buys from. All right, this one here, and then much later on this one here. All right, but in the meantime, price action has already left behind some imbalance and has already left behind an unmitigated order block from a sell point of view that we can start looking at to take price action down towards our high value areas. Do you see that? And this is why smart money is full of opportunities on both sides of the market, and provided you are unbiased and you don't marry yourself to a particular trade idea or a particular direction, the opportunities are endless, right? So again, a nice daily supply zone with imbalance. We can see a break of structure here, but in order to make that a lot clearer, what I want to do is I want to drop down to that 4-hour chart. All right, now whenever you identify a demand zone or a supply zone on a higher time frame, feel free to drop down to the next time frame and then refine it just a little bit. Okay, so this particular zone we're not worried about, we don't need to refine that. But this daily demand zone, I can refine just a little bit to this large high volume bearish candle, which now gives us an even tighter zone in which to look for potential buys from. And you can see that a really nice engineered liquidity swing low in here. You can see the beautiful shelf of equal lows that have been forming in here. Again, if we now come and we look at this particular daily demand zone, that supply zone, excuse me, that we identified, what we can do is we can refine it to the last essentially candle before the push to the downside. And what becomes interesting is that we now automatically have another supply zone, however this time on a 4-hour chart, okay, that exists in here. And this is where it becomes a little bit tricky when you're trading smart money. Okay, so you've got two zones, both of them are valid. Why are both of them valid? Because both of them have led to a break of structure. Okay, what I like about this particular area is that both zones have also left imbalance behind. So we've got two supply zones that meet our rules across the board. So how do you trade them, right? What do you do? Well, the next thing you need to ask yourself is there liquidity present? Because we have the break of structure, we have the imbalance present. Is there liquidity present? Well, for this particular 4-hour zone, the answer is yes. We do have liquidity present in the form of equal highs up here, okay? And for this zone, now with this zone, there isn't any apparent liquidity present, but what I like to say is we have, again, a little bit of engineered liquidity present in here, okay? What tends to happen is price action will come in, okay? Price action will come in, mitigate your first order block or your first supply zone, right? Give you a reaction before pushing up, okay? Taking out all of these smart money traders that entered aggressively with risk entries in here to mitigate the more extreme order block, and then it continues to the downside, and then it continues with the trend that you wanted to see initially. Now, why does this happen? The reason this happens is because more often than not, and with some pairs it's a little bit more frequent than others, but more often than not, price action tends to go for your extreme zone, right? It doesn't always happen, but it more often than not it does. That's what I'm seeing on the 4-hour chart. One more thing, another little spanner to throw in the works, which I want to bring your attention to before we end the video, is that we've got another valid supply area all the way up here. Okay, so what am I anticipating with gold going into next month, the month of May, for the rest of the week? I want to see whether or not price action can come in to mitigate either this order block or this order block, and I want to see whether or not we'll have a nice strong bearish reaction from these two order blocks, or whether we'll come all the way up to here to mitigate this order block before continuing down, right? Now this is the extreme zone of this particular push to the downside, right? This is the most extreme zone of this swing low, or from this swing high, excuse me, to this swing low. Okay, so I would not necessarily be focusing too much on this particular zone, but more these two supply areas in here. Let's see how price action interacts from there. By the way, another thing that adds to this particular bias is the fact that on this wick in here, and I want to leave you with some homework, on your 15-minute chart, I want to say on your 5-minute chart as well, you do have an order block on this wick where we are seeing this reaction from. Now, whether or not this particular order block is strong enough to take price higher, we don't know. Okay, I'm going to leave that one up to you to try and figure out and see whether or not that is strong. The only two things I'll leave you with is this particular order block sits just above liquidity, which is dangerous. And not only that, if you look at the amount of volume that came into this order block and the reaction that we got out of that order block, it should be another clue that possibly this might not give us the required reaction, right? But what we're looking at on gold, it's going to be very interesting to see how price action reacts. And before we leave, as promised, I just quickly wanted to show you guys what NASDAQ is doing. So I believe we were around about here. I believe we were around about here, the 18th of April. Yeah, we were hovering around about here when we performed that video, when we performed that market analysis last week. And as you can see, we formed some really nice equal high liquidity in here. So we still have two valid order blocks present. We then had another strong push to the downside, which formed another supply area here, which I think might be acting as some potential inducement. But that's not a problem, because as you can see, the bearish move to the downside is now approaching our demand zone down here on a 4-hour chart. So what we would like to see is, if this demand zone does hold, we want to see price action coming up to potentially fill some of these imbalances. And then if this bearishness that we've been seeing on NASDAQ is anything to go by, then we could either be seeing price action from these particular supply zones absolutely roll over to take this demand zone, or we could see price action from here, push all the way up, mitigate the supply zone, and then continue. But this is what we're looking at for NASDAQ going into next week, going into the rest of the week, and going into next month. So I hope you guys enjoyed this video. I hope you guys found value from this video. If you did, please make sure that you hit that like button. Do subscribe to the channel so that you don't miss out on any future content. And I appreciate you guys so much for watching. See you in the next one.